Today, I'm going to talk about the bond market.
Okay, moving forward, bonds reaching exhaustion on the sell-off. So more questions here. Okay, let's go through these. Okay. Do you see TLT as here's a question. Do you see TLT as a safe haven buy at today's prices or bonds overpriced? I think we're getting the safe haven bid as a hedge against stocks selling off. Wildly overbought mad hedge market timing indexes also are great places to buy bonds, because when you finally get the correction in the stock market, money piles into bonds and you want to be buying the TLT before that it does that. Okay, another question here on Boeing. Is Boeing a short for the next 6 months? Answer, no. I think the short play on Boeing is over. If we do get another run at 325, take it as a gift and load the boat. I think the next major move in Boeing is to 400 by the dips. Okay, and another question. Do you think the Fed will cut one more time before the year is over, or will they hold off? Answer, they will hold off. Jay Powell said as much in this morning's speech, and really said that not only will there be no more interest rate cuts this year, there won't be any next year either, because we are essentially eating our seed corn when it comes to the next recession. If we do cut rates, that means we will have no tools with which to get out of the recession if we cut rates anymore. And of course, he's absolutely right on that. So bonds, 12-point sell-off creates a great long side entry points, which one day out is already making tons of money. No interest rate cuts in 20 sets up a prolonged range trade. So yeah, we've hardly done any bond trades in the last 6 months because the market was going berserk. But now we could be settling back into a very wide range, and that is a great trading opportunity. So yeah, we're going to be back in there trading like crazy. The great thing about a multi-asset strategy is that when one asset class goes insane, like stocks are going now, you can always go into bonds or foreign exchange or oil or commodities or gold. Always better bargains elsewhere when one particular sector gets overheated, and that's what we do. Looks like the range on yields is about 144 to 215, and we are going to be trading around that maybe for the whole next year. Global QE5 is about to unleash another new wave of bond buying, so happy buying here. Another refi window for home mortgages will open up in a few months when we get the next run to 144 on a recession scare, on a Democratic win scare, whatever it is. Bottom line, 10-year yields will fall below 1% in 2020 and come in line with the rest of the world, then go to zero in the next recession if it happens. Okay, moving forward. Oh, I've got some questions here from the Pentagon in Washington, D.C. It's actually in Virginia, across the river. Are you seeing stocks rising to the end of the year, end of the first of next year? The answer is yes. If so, will there be a pullback during November before a final rise? You would think so. But we have so much liquidity chasing so few stocks now, any pullbacks may be limited. Okay. Okay, here's another question on the TLT. TLT is called the iShares Barclay 20+ year bond fund. In your trailers, you talk about 10-year yields. How are the 10-year yields linked to the TLT? Answer, there isn't a good, liquid 10-year ETF. There are ETFs, but they're fairly illiquid. So I put everybody into the 20-year TLT, just for liquidity reasons only. So yes, it is a proxy. Okay, let's move forward here. 10-year Treasury yield 187. We got down to 186 tonight. We put our call spread on at 192 yesterday. Junk bonds grinding up, but not with the conviction that you've seen in the stock market. This may be a short play when we get our correction. TBT, yeah, bottoming process still in place, looking like we've reached the top of the range. And if interest rates start to fall again, as they are today, you might expect a retest of these lows down here. ELD, emerging market debt, had a great rally and now is starting to give it up. Muni bonds kind of going nowhere.
I hope all of you found this helpful, and hopefully it has also improved your trading. This is John Thomas, the Mad Hedge Fund Trader, signing off for today. Good luck and good trading.